Hi, I'm Kelly, and I welcome you to Learn to Trade with me. I did a video about trend lines, about the anatomy of a trend line, and went through this whole trend and kind of showed you all about it. But I wanted to not just look at the trend line, but look at where should we enter, because that's a part that I had a lot of trouble with at first, was knowing when to enter and where to enter. So let's look at this trend and figure out what would have been some good places to enter. Okay, so when this trend very first starts with this huge bar right here, I would not have entered at this point because at that point I wouldn't even know that it was a trend. I guess you could have said, well, that looks like a reversal bar, so you had an idea that there was a reversal happening. So I'm sure some people would enter just on the prospect of a reversal. I personally don't trade reversals at this point because I'm not that good. I trade trends. So anyways, I would not have personally taken that, but I guess you could. So the first place that I would have seen a good entry is whenever we come down here and we actually form our second low, and this low that's higher than this low, so that like allows me to draw the first trend line. And once I draw the trend line and I see that we're making a turn or we're making a reversal and we're going up with this green bar would have been a place that I would have considered an entry. So let's look at if this was a good idea to enter right here. Okay, so first let's talk about risk to reward ratio. So there's this thing called a trader's equation. And so you want to take your risk and multiply it by your probability of losing. And you want that to be lower than your reward times your probability of winning. Yeah, let me move that up here maybe. Okay. So that's the general idea of the trader's equation. So if I look here, this is having an equal risk to reward. So right here, my risk is 1, and let's just say my probability of losing, let's say that I am a beginner, which I am, and let's say that I'm not very good at knowing which way the trend is going, which I would say is a fair assessment of my skills. So let's just say I'm at 50-50 right now. Half the time I'm right and half the time I'm wrong. So 0.5%, let's say, is the probability. And then the reward, this is 1 because we have this right now has a 1-to-1. And let's say the probability of winning is going to be the other side of that 50-50, which is 0.5. Okay, so this equation does not work because these two are equal. And if these two are equal, then over time, theoretically, I would just break even. Although I would less than break even whenever you consider fees and commissions and things like that. So we do not want to be here. This is not a good place. If I wanted to do a 1-to-1 risk to reward ratio, I need to be a lot better and confident that I'm better at the probability part, at knowing if this is a winner or not. So I need to be more like 70% sure that this is, well, except since this is the probability of losing, I need my losing probability to be at like 30% losses and 70% wins. That is a decent equation for a 1-to-1 loss. I mean, you could do a 40-60. You could still do this. That would still work, but like your margins are much thinner. A 0.2 difference on that one. But over here, we have a 0.4 difference, right? This would essentially be like your profit, and your profit would only be maybe 20%, and here your profit would be maybe closer to 40%. So this is just a much better place to be. Okay, so anyways, I'm not going to be taking entries that are 1-to-1. I need to be taking entries that have a risk to reward that are closer to a 1-to-2, like risk 1, reward 2, or even higher for the reward. So here, let's set my risk down there at the bottom of this green bar, which is about where I probably would put it. Now, if you want to be more safe, then you can definitely put it down here at the bottom of this bar. However, if I do that, then I need to increase my reward by a larger amount. I need to increase it by right there, basically, in order to get... Now, you could do that, and that would eventually work. You would end up closing out on this bar over here, and that would work. But I probably, more realistically, I would personally do it just under the green bar to be a little more safe. And in that case, you can... It's just a little bit easier to get to the 1 to 2. And it doesn't take as much time. So there we would get a 1 to 2 risk to reward ratio. So let's look at this equation using a 1 to 2 risk to reward. So if I have a 1 for the risk times, let's just say my probability is 50-50. So is that less than a reward of 2 times a probability of 0.5? That ends up being a difference of 0.5. So I think it's important to point this out. I get more profit from this equation of doing a 1 to 2 and me being not very good and being like half of the time right and half of the time wrong. I'm going to get more profit with this equation than if I was to do a 1-to-1 risk to reward and I was actually really good at predicting if it was going to win or lose, because that is a profit of only 0.4. So I think that's just important to point out, to try to get your risk to reward ratio at least to 2, and if you can get it even higher, even better. Okay, so that is one good entry point and something that I think I would have taken. I especially like how it's a double bottom right here, these 2 bars. That's a good signal for me. Okay, so then we come up, and I would be just sitting in this trend, or sitting in this trade. If I was not sitting in that trade, I wouldn't really want to enter a trade up here, because this is just kind of looking choppy and not really looking like a place that I would want to enter. So I would wait for us to come back down. So now we come back down. You can enter here. This is not a bad place, but it is more safe to wait until it actually touches the bar. So this bar would have actually been a really great place to enter. This probably would have been my favorite place to enter with hindsight and everything. Not only do you touch the bar, not only does it look like a double bottom or a micro double bottom, but also this green bar is not very big, so our risk is not very big. So let's see what this is. If our risk is, even if we did it below the red bar to be safe, right here, automatically we can get a 1 to 4 risk to reward ratio very easily. We can get over 1 to 4. So here, let's do our equation again. If we have a 1 for the risk and a 0.5, because I'm not very good, and then we have a 4 times a 0.5, then that equation ends up being... that ends up being a 1.5. So that is an even better profit situation. Okay, so that's a really good place to enter. And once we go up, I would just wait till that was, I would just sit there in that. Oh, okay. So that's a really good place to enter. If you missed it the first time, you could always get this second one. I hate the way it does that, but you see this second green bar that's right here. You could have caught that one as well when we kind of came close to touching the line again. So you could have entered there. You just wouldn't have had quite as big of a risk to reward because that green bar it's higher up than this one down here. But it still would have been a perfectly good entry. Okay, so what about when we came back down again and touched this line for the 4th time? There's another place that we could enter. We would do the same thing where we enter after this green bar, or at least that's how I do it. I wait until I see a green bar. Like if it's a bull trend, I wait until I see a green bar that's printed at where the base of it is near the bottom of the trend line. Okay, and then I would have my risk to be right below that bar. And there we go. We can very easily get at least 2. We can get at least 2. And if we wanted to get more, we could get close to 3, 2.7 within this leg right here. So that's a really good entry. Now, okay, you see how we started to come down right here, but we only came down to the middle. I would not want to enter there because we're in the middle of the channel. I would not want to enter there because we didn't come down far enough. And then you see whenever we start to come down, we never do turn around. So I would not have tried to enter here because, well, I mean, I guess, there is a possibility that as we were coming down and I saw this green bar right here, I would have said, oh, there I can enter. And I would have had a really small stop loss because it would have been below there. And this one would have been a loser. That one just definitely, because the trend is turning and it's no longer a trend that's in place. So that would have been a loser. But look at this. Over this whole trend, if we were using the very basic entry of I'm waiting for something to come down to the trend line and then reverse, and then I'm going to buy, if that's our strategy, which is like a super simple strategy that I use most of the time, it's not complicated, then we would have had 1, 2, 3 wins, and we would have only had 1 loss, and that 1 loss would have been a very tiny loss. So I don't know, I think it's a good strategy. So that is what I have learned about entries. Now, another thing I will add. Okay, I talked about the risk and where I would put the risk for these. I should point out, this is just kind of what I do or what I have found is comfortable for me. But there are lots of people, especially if you're going to trade like longer term, that they will put their risk all the way down at the base of this trend. So like that for all of these, and they will just, but in that case you would want to hold on to it. You would want to ride the entire trend. Like, for example, if you would want to buy at the very beginning of this trend, you would put your stop loss at the base of the trend right there, and you would want to ride it out until the trend is basically done. And so if you did that, and you would have, that's a pretty big risk. That's a risk of 66 points. That would still be okay. Your trader's equation would still be profitable because even with that big risk, you still could get a 2.27 risk to reward ratio by holding on for the whole time. So I don't know. It's not how I personally trade, at least right now, but I wanted to point it out because it's, there's nothing wrong with that way of trading. And I should also point out, all of this stuff that I'm talking about with where to enter and where to put where I enter, where I put my stop losses, it is all very, very subjective. It is an art, and it is very, very personal. And so you have to figure out what things you're comfortable with and what type of trading suits your personality. So that is what I have learned about entries and about the trader's equation. Let me know if this helps in the comments below, and I'll see you next time.